Hello, hello, hello. Welcome, welcome to Radio Free Wall Street. 5 o'clock New York time, our live streaming show. Broadcast live on the World Wide Web. I'm so glad to be here. I'm suffering. There was no market today in the United States. England was closed. Europe was afraid to do shit. And Asia's sleepy. Why? Well, the story is, and, you know, it was kind of interesting. I was trying to figure out what story I wanted to tell. And I had these debt crises. And I thought, well, why not just tell the story about the global sovereign debt crisis? You know, I know you haven't heard about it yet. You will. The global sovereign debt crisis is the debts of companies that are, the sovereign debt crisis is the debt of countries that will not be paid back. And this started in Latin America, and it's being spreading very quickly around the world. We got Turkey that's in the mess. You've got Italy, Spain, Portugal, Greece, Africa. Almost every major African bank is in deep capital problems. African debt is defaulting in mass. And it's a story that's not being told, and I wondered why. And the answer is that it kind of creeps up on everybody. Now, we have a new set of reports that people are using to judge the health of the economy. I remember the day when we used to watch the money supply report. And then it became the unemployment report. Now it's the purchasing manager's report, which is the most bogus, bullshit, feel-good report there is out there. And even the central banks are starting to follow it. And the report is designed to always be good. And over 50 means an expanding economy, and even when economies are wiping out, it's still over 50. But that's not the story. The story is that the Federal Reserve was the first to break ranks and start taking back quantum easing. And the Federal Reserve then started raising interest rates. And we're taking away the global punch bowl. The party is over. Now, we add to that an interesting phenomenon, and that was that OPEC decided to raise oil prices. And we've had a nice little upward move in oil prices whose back has been broken. But the story is that the combination of rising oil prices, which is a tax on every energy user in the world, the Fed raising rates is committing a debt crisis. The reason why is all debt around the world, despite all the bullshit, is based on U.S. debt. Now, the other thing is that the majority of the world's debt is based in dollars. Oil prices are priced in dollars. So the dollar has been rising. So you've got these disasters playing at once. I mean, dollar rising in price means versus your currency, if oil stays the same, you got a higher tax. Now you got oil prices rising, and that means that, you know, your energy bill's going higher. Money that's leaving your country going to OPEC just goes out the roof. I mean, it's just an incredible disaster. Then you add to that the rising of U.S. interest rates. And now your U.S. dollar-based debt is becoming more expensive because you're having to pay a higher coupon on it. This combination of effects has led to what will be a global recession, turns into depression. It's already started. And you already are starting to see currencies crash, okay? Now, you're seeing the Mexican peso crash in value. What does that mean? Well, that means that the peso debt is going to wipe out. You aren't going to pay people squat, right? Yeah, you're seeing the same thing in Argentina, Brazil. You're seeing Turkey that's joined the club. Italian debt is now starting to rise on the coupon. And the problem is that Italy, Greece, Spain, France have massive debt loads. And the cost of financing that sovereign debt is getting higher because people are getting worried. And they don't have the luxury of getting out of that debt by devaluing the currency, right? Because they all share the European euro, and their central bank no longer controls currency value. Basically, if you want to know the value of the euro, it's being controlled by this little country called Germany. Now, this gets into the complexity of the situation, okay? As you have sovereign debt defaults start, you already had basically Argentina debt collapse. Venezuelan debt's been in a wipeout. It looks like your next debt is Turkey. They're trying to figure out how they want to handle their central bank, and they're in trouble. You got Mexico, which is facing elections. They're not prepared for a trade war with Donald Trump. It's very damaging to them. You go to Colombia. They're having elections, and again, they're trying to duke out how that country is going to sort itself out. So we are in a big shit. We are on the verge of sovereign debt defaults like never seen before, and it's because in the 2007 wipeout, everyone came to the bar and everyone rescued their banking system. Quantum easing. The problem is, how do you get out of that trap, okay? if you've given them cheap money and you've allowed them to have cheap money for years and you've taken back the financial regulations, you let them do what they want, and they're still losing money, then you've made the problem much worse. And that's what's happened. See, the thought was that if you bailed out the bankers, they promised they're going to be really good boys. We'll never, ever, ever over-leverage or highly leverage again. What will they do? The amount of leverage in the system is now triple. And we're going to have the most conservative investments. We're not going to make the same mistake again. Well, they've loaned the shit out of money for commercial real estate. They've got credit card consumer debt all-time highs. They're making car loans 9 years into the future. So the answer is no. You didn't do what you did last time. You did something far worse. So we are now going to pay the consequences of this huge mountain of debt that's pretty much worthless. And we're already starting to see the defaults grow. Now, the deal is that vast amounts of the savings of the world is tied up in shit debt. Okay, why? Well, people have been trained for the last 30 years to look at yield. How much is my money earning for me? You know, put your money to work so you don't have to. You know, you let your money work and then you can stay home. Okay, well, that's just bullshit. And the reality is that people chasing yield are going to see the biggest wipeout in the history of mankind coming. And it's going to be really ugly. And it's going to be a disaster for the world as you know it. The problem is, this is where it gets really ugly, there's no pool of capital that's not in the game. There is no way that central banks that have already quantum eased themselves to death can add more quantum ease. Now, you have seen a phenomenon where even though the U.S. economy is really slowing, the Fed knows it, they are hell-bent on raising rates, right? You've seen that. We're going to have another rate increase in the month of June. And it's going to continue and continue. Well, why are they doing it? Well, the answer is that they have no choice because what they're trying to do is get their defenses. And normally in a recession, they drop the Fed fund rates by as much 300 to 500 basis points. Well, when you're not near zero, it's impossible to do that unless you go negative. And negative is something that will happen. That's another discussion for another place, another time. It gets a little complicated. But what you need to understand is we have a debt crisis that's building. U.S. 10-year treasuries have soared in value. You've got Italian treasuries soaring in value. You have got double-digit inflation hitting all of Latin America. You've got Africa where the banks are really basically walking dead, man, and waiting for the IMF to come down there and give them a lifeline. And this, I'll tell you what this is. What's really amazing is this is really a stealth debt wipeout. Normally, the financial players know about debt wipeouts, and there's a lot of communication on that. And this one is like, shh, don't tell anybody. This is the secret stealth debt wipeout. This is the kind of one day you wake up, and all of a sudden it's biting everybody in the ass. And the reason for this is that markets are more sensitive to news and information than before. Look, you got the information superhighway and the Internet. It has changed the way markets work. Well, that means that people in power, it behooves them not to mention how bad things are. Not to mention there's a crisis. Why? Well, because you're going to cause panic. And reality is that we are starting to see signs of panic everywhere. You've seen how the dollar soared in value recently? Well, let me tell you why that is. People are going to the only safe currency in the world, the dollar. They're going to the only debt guaranteed to be there, and that's U.S. dollar debt. And people are preparing themselves for what's going to be a very ugly global economy. Now, you've heard all this talk about these trade wars and stuff. Well, let me tell you what that does. That removes confidence from the system. That removes profits from banks. That removes opportunities for corporations. And that sets in motion a whole lot of very ugly things. You know, we had what we call the Smoot-Hawley tariffs that came back in the 20s and went to fruition in the 30s. Okay, it was the same kind of mentality like we have in Washington now. By God, they ain't stealing our jobs no more. They ain't taking our business away. And what happened was no jobs for anybody. And eventually the job you had for the populations of the world since they couldn't work in the factories was called soldier. And the occupation was the army. And the job description was killing. And that's where you got World War II. World War II was a direct result of the stock market wipeout, a direct result of the credit crisis, and a direct result of Fed raising rates, and a direct result of tariffs and the trade wars that ensued. We are going down that same road again. Now, remember that in the days of wagons and schooners plying the ocean, trade was minimal and very dicey and very risky. In the world we live in with, the 747 cargo plane can get anywhere, anytime within 12 hours, with high-speed ships that ply the oceans and do it for very cheap. I mean, boats that can carry 7, 8, 9, 10,000 containers. It is a world where shipping, international trade is the order of the day. And there's been great benefits for it. America is no longer the factory of the world. We are now the service economy of the world. We are providing the things that you can't touch, see, and feel. We're providing the internet. We're providing the coding. We're providing this whole digitization of the universe. And our balance of trade deficit in services is a huge surplus. But when you look at the balance of trade deficit to coal mines, that's an important occupation, and steel, you get confused. Does America really want to compete in a very marginal automobile business? The answer is no. Do we want to supply the technology and the software for the self-driving car? Damn right we do. Do we want to be involved in coal mines? And do we want to be involved in steel production? No, there's no money in it. How about magnificent special purpose silicone chips? How about chips that hold embedded code that wire the entire world to the internet? How about 5G implementation? That's where we're at. That is our secret. That is what we do. How about robotics, artificial intelligence? You know, it's a situation where, think about it. You're going to have a bank that doesn't have a building. You're going to have a bank that exists in the internet. You're going to have a bank that has no people. People are going to contact loan officers that are robots and artificial intelligence. Okay, that means that looking at head count, square footage, number of branches are not the way to calculate anything. It is a world that's completely being revolutionized by a digital revolution that is changing how everything works. And unfortunately, old fogies that are not flexible, there's nothing wrong with being an old fogey, but that's if you live in a fog. Now, as a lot of you have learned with us, that, you know, the thing you do is you constantly innovate, you constantly update your skills, you join the revolution as it is, okay? And that keeps you young and alive. The problem is that we have people who are very set in their ways, who don't understand the digitization of the planet, do not understand the digital revolution. They're bringing us back to the day of mighty coal. And that is a danger. We're also shutting down our borders. We are now threatening a trade war over automobile tariffs. We've crippled the economy of Latin America, and great fear there. Africa, forget it. They're so far out of lunch, there's no chance that they're participating in anything but in a disaster. Now you got Europe. Well, Europe went on a grand experiment, and that was the European Union. The problem was they never put together a banking union. In other words, you know, the United States has one central bank. Okay, it has one sovereign issuer of debt. The problem in Europe is that each country has their own central bank. Each country has their own sovereign debt that they issue. And the problem is that you've got a two-speed Europe. You've got the largest exporter in the world in Germany, and their high-value exports. And you've got Greece that's, you know, basically feta cheese and olive oil. So the problem you have is the great disparity between these countries. And they've lost the tool. They've lost the tool of being able to get out of their debt crisis by dropping the value of their currency. And now you've got a problem. See, in lieu of that, the European Central Bank says, well, okay, well, you're right. You cannot drop your currency to get out of this debt crisis. You're going to have to pay your debt. We're going to make Greece pay your debt. We're going to wipe out the economy. We're going to wipe out the retirees. We're going to wipe out investment. But, by God, you're going to pay your debt. Well, so then there was phase two. And they said, well, okay, since they can't get out of their debt by changing the currency, what we'll do is the European Union will buy debt. And among the big debtor countries of Europe, that's Spain, France, Italy, Belgium, Greece, well, guess what? The central bank owns 25% of the debt. And they're under pressure to buy more, and they're not able to. So you're now going to end up with where you would have one or two economies that would fail, bringing down the entire European Union. And you've got the same situation in America. We started trade wars that we can't win, that have no purpose, that is removing confidence from the system. We had a tax break bonanza for billionaires that did not stimulate the economy. We have got a country that cannot compete in with the cheap labor markets, and we're trying to convince ourselves they can. We're trying to convince our workers, well, you just work a little faster, work a little harder. So we're trying to do the impossible. Now, there are consequences to this. By the way, as we start a new age, you know, whether it's the age of agriculture or whether there's the age of the assembly line, or the various phases of the Industrial Revolution, there's always great disruptions. So we're now at a time where the middle class is wiping out. You go to Ohio, you go to Michigan, and Indiana, talk all the bullshit you want. The reality is the jobs are not coming back. Now, I know we got politicians that want to blow blue sky up your ass so that they can enrich themselves and gain power. But the reality is the Rust Belt is a Rust Belt for the reason. And manufacturers dying for a reason. And the reason is it's a new world. And we don't have assembly line workers anymore. We're not going to build things with people. And it's the dawn of the robot and artificial intelligence. It's a dawn of a new digital age. And how much you want it to wish that it doesn't happen, it doesn't stop the revolution that's going on. And it doesn't stop the burned out people who can't find a job, who have no skill set, who are high on opioids, crank, booze, and basically slowly killing themselves. And the reason why is they have no hope. Now, to give them hope and say, well, listen, you go to junior college here, and we're going to retrain you. It's not going to happen. So we are seeing a massive disruption in how labor flows work. We are seeing a major disruption in what man does for a living. We're seeing a major disruption in old skill sets dying and new ones coming out, but guess what? We have too many workers. So the way we handle this is going to really sound disgusting. The way we handle this is a great old-fashioned depression. Depressions kill a lot of people. Depressions eliminate a lot of factories. Depressions change the equation. Old cities die and new cities build. You have cities that are the technical trading hubs of America, and they're growing in leaps and bounds. And then you have the old Rust Belt, make coal great again, coal mining cities, the Rust Belt factory cities, steel mill cities, and they're dying. Now, no matter how much you want to do with redoing the old post office and making the train station something really cute and far out, as much as you want to do trying to put, entertainment on the canals, the reality is that the skill set of your population to compete for jobs in the new world is not there. And your population is not going to upgrade those skill sets. So what is going to happen? Well, in essence, your city and your people in them that are not part of the new age will actually shrivel up and die. Now, that gets me back to the sovereign debt wipeout. You see, you don't have a sovereign debt wipeout in Germany. Why? Because it's a modern economy. They are leading factory automation. You don't have a sovereign debt crisis in the Netherlands. Why? Because they have a highly educated economy that's doing bio and bioagriculture and moving in the brand new age, okay? So you've got countries that can compete. You got countries that have pockets of skill sets, okay? Silicon Valley is not going broke in America, okay? New York City is not going broke as a financial hub. Now, there are going to be dislocations. We're going to have a depression. But the reality is this, that you need to grasp is that the poor get much, much poorer, and the richer, well, they get a little less rich. So we're resetting the equation. We're resetting the value of real estate. We're resetting the concept of Main Street and shopping centers. We're resetting delivery. We're resetting manufacturing and transportation. And this is a huge, huge, huge transformation that people want to give you some bullshit and tell you it's not a problem. The sovereign debt is reflecting the fact of how progressive is the economy. How much on top of these changes are your populations? Can they deal with this? And the answer is, for many countries like sleepy old Greece, no chance. Spain, halfway. In Italy, you got a two-speed Italy. You got the north and the south. So what's happening is your agriculture economies, your manufacturing economies, they're dying, and they can continue to die. Now your digital economy, your innovators, your service sector economies, they're booming. And so there is a huge disparity between the old economies and the new. What are the politicians doing? Well, they're trying to say, well, it's that goddamn Mexican. He took your damn job in the factory. That's what happened. China, you took advantage of us. We're not going to let it happen. It's not true. It's just not true. It sounds good. In Europe, it's the cry of the African migrant worker that's coming in there. So every country has a scapegoat. Every country is blaming their agricultural and their immigrant laborers who work for much less. But the reality is the jobs are not being lost to that. The jobs are not being lost to the slave shops of Mexico. Jobs are not being lost to the low-pay factories of China. They certainly aren't being lost to the no-pay factories damn near of India and Vietnam, for example. They're being lost to technical revolution. They're being lost to change. They're being lost to politicians who are frozen in their thoughts and who are, should we say, a little bit disingenuous because they want to get elected. And the easiest way to get people elected is blame someone else for your problems. Hello, Billy Bob. You remember when you were in high school and you didn't want to take trigonometry? You remember when you never learned programming? Remember when you went to work in the factory and spent all your money on a pickup truck and beers? Well, those chickens are now coming home to roost. Mr. Farmer, you are in a business that is becoming obsoleted. Okay, farm belts are moving with climate change. Farming goes to where the most efficient producers produce the most. And Mr. Farmer, the genetically engineered crops are changing forever the marketplace. And trying to force America to burn corn, which is food as fuel, to subsidize you, as you're seeing, is not working. So what's happening is a whole lot of people are blaming the wrong events, the wrong situation. Now, I know this is about sovereign debt, but remember, sovereign debt is the sum total debt of countries. And people make up countries. And countries that are prosperous have sovereign debt that is very cheap to finance, and they don't have a lot of it as a percentage of GDP. America is a very mixed country. We have a two-speed country, and our debt is reflecting that. In other words, American debt will always be paid. But the problem is the cost of financing that debt is going higher, especially in the short term. And what will save America is the fact that we're a great trading country and a great trading currency. We're a great financial hub. Now, the problem with that is, again, that you will now disrupt the financial institutions. See, we're in big disruption. You know, this big, great, big trillion-dollar capital bank with 100,000, 150,000 people and tens of thousands of branches, they have a load. They have an overhead. They have a cost. Now, the new bank that comes in there says, we're going to use the ATM machines as our branches, and we're going to use your smartphone as your checking account and as your pay system, and we are going to have a virtual bank. And we are not going to have trading departments and loan offices. We're going to do it all by the Internet. And what's happening is the race is on right now for banks to modernize and digitize. Now, the problem is that we got 5,000 banks, about 4,000 more than we need. And the problem is that some big banks will digitize. Many will not. Many small banks that don't have the regulatory systems in place, don't have the programmers, will shrivel up and die. So you're seeing a large revolution going on. The same thing with factories, okay? Will General Motors be manufacturing cars in the future? I don't know. I know Elon Musk won't be. How many car companies will we have in the world? What will a car look like? Will you actually go to a dealer and buy a car? Or will you be on your phone on the Internet and you will buy shares of a car? And it's not any car, but it's a car company that promises you'll have a car at your door in 10 minutes anytime, day or night. So we're changing the entire transportation model. We are changing how the world is structured. And you know what? The debt markets are going to reflect that. The old countries of Latin America that are really stuck in the time of the conquistadors have not modernized their populations. I mean, they've had some pockets of it. They have not modernized their economies. They haven't changed their financial models. They haven't upgraded the currencies even. See, the reality is that we have too many currencies in the world. And that's because, remember the little trick where you can devalue the debt by devaluing a currency and pay off less and get out of it? Well, the problem is that is going to affect capital markets and how capital is formed. Are we really going to form corporations and have them capitalize through the stock market, or will it be crowdfunding? What will the world look like? Well, let me tell you, it's going to be a much different world. And these dislocations of manual laborers, dislocations of drivers, dislocations of factory workers, dislocations of people who cook our food and clean our toilet, and being replaced by machines is a staggering change that most people are not prepared for. Now, let me tell you the amazing thing about these kind of changes. They only happen in distress. In other words, companies kind of troll along with their old model until they're backed into a corner, until their base of customers falls by half. They can't hold on to a price point anymore. Competition's out the yang-yang. And that's when they've got to lighten up and change the model. What most companies are not telling you is their future plans are to have far less employees, far less office space, far more robotics, far more automation, far more virtual business models that exist on the internet. And what's their plans for their employees, if you really want to know the truth? Well, the Supreme Court just passed that employees can be forced to not sue the corporations, and they can be forced into binding arbitration. What's that all about? It's about you're fired. Don't go back to your desk. A security will deliver you a cardboard box to your door. Don't call us, we'll call you. No, you have no benefits. No, you have nothing. Thank you very much. Goodbye. And that's the model. So I'm trying to prepare you for a world where the stock market trades at 10% of the value you see now, and a fraction of the volume. I'm preparing you for a world where baby boomers, that inverts the emerging market. Why would you go into an emerging market? I mean, basically that's a market that's behind, right, by the fact that it's emerging. What did you think was going to happen if the emerging market doesn't emerge? In a technical revolution where only the most highly technically competent businesses and companies are prospering, what would make you go invest in something out of the dark ages businesses and in countries that are behind, that don't have the educated populations and think it's going to come out? Oh, they told you it's going to grow. Well, let me tell you something. Africa's been an emerging continent for about 2,000 years. You know, the emerging companies and the emerging countries have always been emerging. They've never emerged. The reality is they're that way for a reason. And I'll leave that to your imagination to figure it out. So, no, you want to go with the winners. And you want to now kind of shelter in place. Let me explain. There will be wonderful opportunities to pick up real estate on 10 cents on the dollar. There will be wonderful, wonderful opportunities to crowdsource in the businesses that are carrying technology forward, and they will hardly know it's a depression. There will be fantastic opportunities as debt goes into a negative yield, okay, and negative. I know something's hard for you to understand, double-digit negative, okay? And you have to have a different skill set to understand what is a global deflation. You have to have a different skill set to understand that the retail shop-to-your-drop phenomenon is over with. You have to have a different skill set to understand that investing is going to be completely different. Now, if you acquire that, then you join the new age. Because even in the ugliest depression, millionaires were formed. Capital was preserved. In the worst depression you could ever imagine, people got married, and they did shopping, and businesses had profits, and they grew and established some great legacy companies. And you're just at such a time now. And the beautiful thing about a depression is that you can do it for so much less money. Your price point of entry is much less. That's because the competition is not there. Nobody else has the money. So I am presenting to you something that no one else wants to tell you, and that is we are about to enter a global sovereign debt default in Asia, in Europe, in Latin America. And there will be a very precious few, places whose sovereign debt will not default, and that is America. So you have been warned that defaults are coming. Currencies will collapse against the dollar. And what caused it? Well, basically quantum easing had to come to an end. Fed raised rates. Dollar soared in value. Interest rates meant that a country whose debt were based in dollar instruments are paying a lot more. Countries that had debt based in dollars, well, obviously the dollar crash are paying a lot more. And OPEC went in there, and exactly the wrong time has created hellacious inflation in third world shitholes. You can afford to pay more for a tank of gasoline. But Latin American countries where people are right on the edge, they can't afford that. Same thing in Africa. So what did OPEC do? Well, they've basically helped drive the world into the next recession. Federal Reserve drove the world into a debt and a debt financing crisis. They had no choice. And in reality, stock markets and browsers all over the world about to collapse. So that's a heads up. See, that's the future. That's how to make money. Now you get there and go, well, I don't know. It doesn't sound like that's happening here because the PMI said everything's going great. Look at the malls. Look around you. Look at the people around you. And you'll figure it out. Stock markets don't drop 2,000 points in 2 days because things are going well. 10-year yields don't go the highest they've been in 10 years because things are going well. Presidents running around with trade wars and sanctions do not bring prosperity and growth to the global economy. Okay? So you now have an understanding of what you're about to see. And my friends, it's going to be ugly, it's going to be devastating, and it'll make you rich or make you poor. But listen to me, it's going to make you something.